Hi, I'm Sam Brotman. I'm here to talk to you about tax strategy, and specifically tax strategy for business owners and entrepreneurs. So let's talk about you for a minute. You're an entrepreneur. Where you were 10 years ago, even 5 years ago, maybe even a year ago, is not where you are today. And where you are today doesn't reflect where you'll be a year from now, 5 years from now, or 10 years from now. As you grow as an entrepreneur, your tax strategy needs to grow with you. So let's talk about this for a minute. The reality of most people's situation is that when they start out small, they are better off as a pass-through entity. Most people get told to set up an S corporation. They get told to set up an LLC. And the reason for that is there's a stigma around the concept of double taxation, which comes through with a C corporation. In the beginning, when you have an enterprise, the enterprise earns revenue, it has expenses, and it generates a profit. And the business owner, to begin with, needs a lot of that profit in the beginning to sustain them and their family. As the business grows, as the business generates more profit, the family doesn't need all that profit, and consequently, the business needs that profit in order for the business to continue to grow. The problem with pass-through structures, especially for larger businesses, is that that profit, when it gets pulled over, gets taxed at individual income tax rates. Individual tax rates for most entrepreneurs are 37 to 39% on the federal level, not counting any state tax considerations. Consequently, corporate tax rates for non-pass-through entities are 21%. And so immediately, by making a switch from a pass-through entity to a non-pass-through entity, you can save anywhere between 16 to 18% in taxes from a theoretical perspective. If you saved an extra 10% on your tax bill every year, just on the federal side, wouldn't that be something that you would be interested in? So when you're going and looking at your corporate structure, or when you're choosing an advisor to help you with this, it's really important to pay attention to what the larger picture is. Most people, when they think about tax planning, think about deductions or credits or things like that. But that's kind of the side dish. And what you really need to think about is, what is the structure of your enterprise? How does the enterprise fit together? And are things being done in the most tax efficient manner?